Hi, how are you? Good morning. Is there any question related to last lecture? Okay. If there is no question related to last lecture, just I want to recall you that in the last lecture we have completed the target costing, and our today's agenda will be the life cycle costing and throughput accounting. First of all, we will be doing the concept of life cycle costing. So let me start this. Life cycle costing. Basically, the word life cycle means product's life cycle. And we already know that costing means the way to calculate cost. If I show you a product life cycle, it will be just like this. Here, the product comes for the public use, or we can say that here at this point, the product is launched. So the period behind this is known as research and development phase of the product's life cycle. So the first stage in the product's life cycle is the research and development. Then this is the introduction stage that the product is introduced to the general public for use. So this is the introduction stage. Then there is some growth in the product sales. Then there is maturity where there is maximum sales, and after maturity there is a decline. So basically 5 stages are involved in a product's life cycle, or we can say that life cycle consists of 5 phases of life. The first one is the research and development, introduction, growth, maturity, and decline. And in some cases, the companies after decline try to revitalize a new version of the old product. So if there is some changes in the basic product, then we launches the basic with some updated version of the product. Then this stage will be the revitalization stage. Now, the concept of life cycle costing is that we will add the cost of the whole life cycle. What does it mean? Cost of the whole life cycle. It means to say that if a life cycle consists of, let's say, 4 to 5 years or 2 years, whatever the time period is, we will add the cost incurred in each phase of the life for the product. How much cost have been incurred at maturity, how much cost have been incurred at decline. So basically, we will add the 5 stages total cost with respect to whole life cycle of the product. All years cost will be added. This is also termed as total life cycle cost, or we can say that total life cycle cost. And we will divide this with the number of units in a life cycle, that how many units we have sold for this product in the life cycle. So we will get cost per unit in our life cycle. As far as your exam is concerned, you will be given with the stage wise cost information, and it might also be with the respect to number of years, 1 2 3 4 5. So we will be adding these cost stage wise and the year wise. Then we will arrive at a total life cycle cost, and we will also be given with the number of units in that life cycle. So ultimately, when we will divide the total life cycle cost with the total number of units in a life cycle, we will get the life cycle cost per unit. In which industry this concept is suitable? Basically, this concept is more suitable in a industry in which the products have usually a shorter lifespan, and a lot of expenses are incurred mostly in the research and development phase. Just to apprise you that iPhone, a lot of expenditure is incurred on research and development phase. Then the production cost is not so high, but ultimately the phone is sold at a higher price because we have to recover our research and development expenditure, and the life cycle is almost a year. In every September, Apple launches a new version, a new model. So we can say that how what the company has incurred as a research and development, what expenditures are incurred at introduction stage, growth stage, maturity, and then decline, because after 12 months there is some new product with this updated features. So the old product will be discontinued. If we look at this diagram, initially the sales are low, then ultimately they are rising, and similarly the profit is also in the same pattern, that at initial stages profit is low, then a bit higher, then maturity at the highest, and after maturity there is a decline. The space between this umbrella is getting down. So we can say that at the earlier stages of the product, the sales and the profits will be low, and the later stage is at the end of the life of the product, the same will again happen, but at a majority, profits and the sales will be at the higher side. So moving to the numeric illustration, these are the handouts. First of all, life cycle introduction is given. What is the life cycle? A little bit is written regarding the stages of life cycle. So these are the 5 stages: research and development, introduction, growth, maturity, and decline. Then a brief description is given for each stage of the life cycle, and then the same type of the diagram is given. But here there are two curves. One is showing the revenue and other one is showing the profit. And on the x-axis we have the time, and on y-axis we are having the sales and the profits. What are the benefits of life cycle costing? You will read it by yourself, and you need to keep in mind these points so that if an examiner can ask you regarding what are the benefits of opting the life cycle, you can write in your paper. Then life cycle costing in a manufacturing and service industries. This is also something to understand, and this is self-explanatory. Let me read the example number 1 for your further clarity. Solaris specializes in the manufacture of solar panels. It is planning to introduce a new slim line solar panel, specially designed for small houses. Development of the new panel is to begin shortly, and Solaris is in the process of determining the price of the panel. It expects that the new product has the following units. So there is a 4 years time span, number of units are given. Then research and development cost is incurred in the year 1 and 2. Then marketing cost is given. Production cost is given on per unit basis. So we will be multiplying this with the number of units. Customer services cost is also per unit, and there is some disposal cost in the 4th year. So this will be the total life cycle cost information. Now, the marketing director believes that the customer will be prepared to pay $500 for a solar panel, but the finance director believes that this will not cover the cost of the throughout the life cycle. It means that finance director is of the view that 500 is less because 500 will not cover the life cycle cost. Now, what is the requirement? Calculate the cost per unit looking at the whole life cycle and comment on the suggested price. So there are two requirements. One is the calculation of the life cycle cost per unit, and other one is the commentary. So we need to comment as well because the examiner will place some marks for the comments, might be 1 mark or 2 marks. So let's solve it. The format of doing this is very simple. In the year, we will be starting year 1, 2, 3, and 4. And at the end, we can have a column of total as well. So here, the first stage is research and development. And if we look at the question, the research and development cost is 1.9 million and 100,000. So I am rounding all the figures in thousand. So this will be 1900 and this is 100. So ultimately, there is a total cost of 2 million incurred on life cycle. But this cost is incurred in 2 years, in year 1 and year 2. The next is marketing cost. So the marketing cost in the initial years are high because the product is new. So companies incurring more marketing expenditure. So the examiner can ask this type of MCQ as well, that in the earliest stages, the marketing cost in the life cycle costing are usually high. So this is a true statement. So this is 100, 75, 50, and 10. 100, 75, 50, and 10. So this is the marketing cost. What total amount is spent on marketing? So 235 is spent on marketing. Then production cost per unit, 500. 500 multiplied by number of units, 2000. So this will be how much? 2000 multiplied by 500. This is production cost. Yes, 1 million. Then 450 into 15,000. So that will be the answer. 450 is the production cost per unit, and 15,000 is the number of units in the year 2. I'm waiting for the calculations. So this is 6750 6750. Three zeros are rounded. And what will be next? 400 into 20,000. 8 million. Then 450 into 5,000. So make a total of these four figures. We will get the total production cost. So 18 million would be the figure. Then customer services cost is also per unit. Customer services cost. 50 multiplied by 2000. This will be 100. 40 into 15. 600. 40 into 20,000. 800. 40 into 5. 200. So the total will be 1.7 million for customer services cost. Then disposal cost of equipment is in the last year. We need to incur some disposal cost and which is 300,000. So we can either make the total in year wise, but we are not required to do so. So we will be simply adding this column of total. So we can get the total answer. It is up to us whether if we want to have a total of year wise data, we can have the total, but this is not mandatory. So this is 22,235, and life cycle cost per unit will be equal to total life cycle cost divided by total life cycle units. Total life cycle cost is 2,235,000 divided by total number of units in the life cycle. So the number of units will be 2,000 plus 15 plus 20 plus 5,000. So it will be 42,000. So divide this. What will be the answer? This will be your life cycle cost per unit. So this is 529.40. So what was the suggested price? Suggested price was $500. So finance director is right that $500 is low. So what is our comment? We can write it as life cycle cost per unit of a solar panel is $529.4, which is less than the suggested price of $500. Therefore, finance director reservation is true. We must sell the solar panel at least equal to cost. So in order to be at break even, we must sell this solar panel at least equal to sol. Uh, otherwise our selling price should be higher so that we can earn some profit as well. So this is the commentary that you will write. Is there any confusion related to this? If you has, please raise your query. So life cycle cost concept is very simple. We will simply add the cost of the whole life cycle of a product. I'm waiting for your queries, please. Please read these points. And if there will be any confusion, I'm available to answer your confusions. I'm giving you the time. When you complete it, please send me a text that it is done. Are you done with it? I'm waiting for your response. Is there any question from this video? Before moving further, please read these benefits as well. Benefits of life cycle costing. There are a number of benefits associated with life cycle costing. So these are the benefits. Please read these. Are these points clear so that I can move? Okay. Before moving, I want to just for your knowledge, I want to tell you something that if we make a total of these figures, so we will be getting the value for year one, value for year two, three, and four. And in your management accounting paper, you have studied the concept of time value for money. And we know that dollar received today is not equal to the dollar received after 1 year or after 2 years. So whenever there are 1 to 4 years, you did the NPV questions, you calculate the present value of the cash flows. Practically, when life cycle is more than a year, practically we calculate the present value as well. We calculate the present value of year one cost, present value of year two cost, and so on. But here, as far as your exam is concerned, in a life cycle costing, examiner assume that there is no time value of money. Therefore, you need not to get yourself confused that why we are not looking for the time value of money, because we are having an assumption that there is no time value of money in performance management paper. So in this syllabus, we will ignore it, but practically when you will apply this concept of life cycle costing on your company's product, you will definitely be considering the time value of money as per your company's cost of capital. So this was the practical point that I want to just reconnect the things with your previous knowledge and applying those skills at this level. Is it clear? This point you must be remembering while doing practically in your companies. You are applying the concept of life cycle costing. Now, moving to the next topic, life cycle costing topic was very short topic. Next topic is throughput accounting. As the name suggests that this is accounting, so some people might think that is there any other new type of accounting just like management accounting, financial accounting. So this is not the full-fledged branch of the accounting. This is just a simple one topic. The term throughput accounting is basically a production management system or a production management technique which aims to maximize the throughput. So one thing we have understood that this is a product management technique or production management technique, and its aim is to maximize the throughput. Now, we need to understand what is the meaning of throughput. Throughput is basically the difference between sales revenue and material cost. So if we subtract only material cost from the sale price, we will get the throughput. This is just like the concept of contribution. That contribution is the sale price minus all variable cost. But here throughput is the sale price minus raw material cost. And this throughput accounting concept is basically from the theory of constraints. What is theory of constraint? Is an approach to production management which aims to maximize sales. Basically, theory of constraint means the bottlenecks. We know that in every business, in every life, there are a lot of bottlenecks, a lot of constraints. Just like if a Apple company wants to sell phones to all population of the world, Apple cannot sell its phones to whole population of the world. Why? Because there are other companies, Samsung, Huawei, and so many other companies, and some people buy the phones of companies. So there is a limitation that no company in this universe is able to sell so many units as the company wants. So companies need to put some efforts. Example of the constraint, the sales demand. But when we comes to the practical reality of every company, we are not having sometimes the required quantity of raw materials, required quantity of skilled workforce, required quantity of machine time. So can be a lot of bottlenecks. So theory of constraint assumes that the bottleneck is the process time, processing capacity of every department is a bottleneck. And under the certain bottleneck, we need to maximize our throughput, means we need to maximize our profits. After getting the throughput, we will arrive ultimately at the profit figure. There are some assumptions of this theory that there will be only variable cost, and that variable cost will be the raw materials. All other costs are assumed to be fixed, including direct expenses, direct labor. So every type of the cost other than raw materials are assumed to be fixed cost. So when we will subtract the raw material cost, we will get the throughput. And from this throughput, we will be subtracting our fixed costs, which are labor, overheads, and so many other costs. All costs are assumed to be fixed. So we will be getting the profit. So first of all, in this topic, we need to identify the bottleneck. So this is the first step, identify the constraint. Then second step is decide how to exploit the constraint. Then subordinate and synchronize everything else, then evaluate the performance. And then if the constraint has shifted, sometimes we try to eliminate that constraint, and one constraint is now in an ample supply, then another constraint would be there. So the constraint has shifted. So we will again follow these 5 points. there are some assumptions. There should be a bottleneck or a binding constraint which limits the production capacity of the organization. So basically, constraint is something which is putting a limit to the production capacity of the organization. Just in time inventory system is used. Here, this is very important to know that throughput accounting assumes that there will be just in time inventory system. All production cost as well as the non-production cost are fixed except raw material. So I have already told this. Work in process is valued only at material cost because the variable cost is only material cost. So this is also the assumption that the work in process will be valued only at the material cost. Profitability is measured by the rate at which sales are generated. It means that how quickly we are selling because we are using the just-in-time inventory system, and we will be buying the raw material as and when required. So our profitability will be measured that how quickly we are selling our product. So if there is a long shelf time of the products, then we are not showing our profitability in a better way. So in order to satisfy the shareholders and the customers, we need to sell the products very quickly. So this will be our profitability. If we compare the conventional cost accounting and throughput accounting, in conventional cost accounting, we say that inventory is a current asset. So inventory is reported as an asset. But in the throughput accounting, inventory is not an asset. It is a result of unsynchronized process. So what is the meaning of this? If we are having something which is unsold, because we know that inventory is known as unsold items. So being having some unsold at the day end or the period end will show that we are not able to sell our products quickly. We have produced a lot of products and we are not competent enough to sell these products. So inventory is not considered as an asset, and it is considered as the unsynchronized manufacturing. It means that we are just manufacturing without any planning that whether we will be able to sell or not, and it is considered as a barrier to profit. Cost can be classified either as a direct and indirect, but such classifications are no longer useful in this throughput accounting. Product accounting profitability is determined by the rate at which money is and how quickly. Then profits can be increased by reducing cost elements, but profit is a function of material cost, total factory cost, and throughput accounting and throughput. Sorry. So there will be throughput accounting ratio. I will explain you what is the throughput accounting ratio. I am just skipping it for the time being because I will explain throughput accounting ratio with the help of a numeric. Then I will move to here. So because it will be a numeric part, so I will be explaining it there. Is there any question or any confusion that you want to clear before moving to the numeric part of the question? So the silence shows that there is no question. So can I move? Example 1. A PLC produces 3 products X, Y, and Z. The capacity of A's plant is restricted by process alpha. Here, the process is given that which process is a binding constraint, but most of the exam questions you are not given with the department name that which department is a binding constraint. So this is example 1. Here in this example, alpha is described as a bottleneck process. So this is a simple question. Process alpha is expected to be operational for 8 hours per day and can produce 1200 units of X per hour, 1500 units of Y per hour, and 6000 units of Z per hour. So the total capacity per day is 8 hours. Selling price and the material cost of the each product is given. So selling price minus material cost will give us the throughput contribution. We can write it as throughput, or we can use the word throughput contribution, the same meaning. The rest of the cost, which are the conversion cost, labor, overheads, all the costs, are 720,000 per day. Calculate the profit per day if the output achieved is 6,000 units of X, 4,500 units of Y, and 1,200 units of Z. So this is very easy to calculate. We will simply multiply this with the number of units. So the number of units X produced are 6,000. It is given in the requirement. Then 4,500, and for this is 1,200. So what will be total throughput for X? 420,000. What will be 4,500 into 80? So please take a total of it. You will get the total throughput. And what is the conversion cost per day? You will subtract it. So this is your per day profit. Was given, we just multiplied. So this is your per day profit for this company. Now calculate the throughput accounting ratio for each product. I will definitely move to this part, but you may note it, or if there is any question, you may ask. Now, if you look at the question, product alpha's capacity is restricted. So this will be the production capacity, production time will be your binding constraint. And now we will move to throughput accounting ratio. Throughput accounting ratio is equal to throughput per hour divided by fixed cost per hour. Throughput is basically your return. So throughput per hour is basically return per factory hour, that how much we are getting as a return per hour of the factory. We will divide it with the fixed costs per hour. Now we will learn how to find the throughput per hour. It's very simple. Throughput per unit divided by per unit time. Definitely this time will be the per unit time of the binding constraint. So in this case, the binding constraint is the process alpha. So if we look at the values of X, Y, and Z, the throughput per unit of X is $70. So this is throughput per unit. This will be divided with per unit time. The per unit time is not directly given, but it is written in the question that 1,200 units of X per hour. So we can say that in 1 hour we can produce 1,200 units. So this will be 1 divided by 1,200. So we will get the per unit time for X. So what we get the answer for throughput per hour. Please check whether this is 84,000. Per unit time is not given. So in 1 hour, we can produce 1200 units. So 1 unit. So when we solve it, we will get this answer. Then 80 is the throughput per unit for Y. And the same type of data is given for Y. 1500 of units per hour. So 1 divided by 1500. What will be the answer of this? And then we are having the throughput of Z, which is 200, and 1 divided by 600 units of Z per hour. 1 divided by 600. So I guess this will be 120. Am I audible? Please share answer of Y. If there is any confusion, please ask. Y's answer is also, I guess, 120. Okay. Now, throughput per hour is calculated for each product. Now we are required to calculate fixed cost per hour, and this is very simple. Fixed cost per hour, the sum of fixed cost are given 720,000 per day. So we need to divide it with the capacity of process alpha, because the process alpha is a binding constraint. So the per day capacity is 8 hours. So what will be the fixed cost per day, per hour? I'm waiting for the answer. Fixed cost 90,000. Okay. So when we have all the things, so 84,000 divided by 90,000. Both figures are in dollars. So dollar will be cancelled out. Therefore, this is a ratio. So what will be the answer? And this ratio will be less than 1, which means that we are earning a profit of 84 per hour, but we are having a cost of 90 per hour. So ultimately, we are having a loss. So this is showing a loss, that this product is not profitable. And then 120,000 divided by 90,000, and the same concept that this will be in ratio, no dollar sign with the answer. But now this is greater than 1. So this is showing a profit. And for Z, this is also the same. What is the answer? So this will be the concept of throughput accounting ratio. So I skipped these points. Now you can look at these points, that this, what is the throughput accounting ratio? Return per a factory hour divided by the fixed cost per hour. Then this is the formula for the return per hour, throughput per unit. And then throughput accounting greater than 1 is profit, throughput accounting ratio less than 1 will be the loss, and throughput accounting ratio equal to 1 will be no profit, no loss. So these are the points. Now, if we want to improve this throughput accounting ratio, because this is having a loss, so having a loss is not a good thing. So if we want to improve this, the one way is to improve this is that reduce this figure. And how this figure will be reduced? If we increase the capacity, this figure will be reduced, or if we reduce the fixed cost. So we got the 2 points, that by increasing the total capacity or by decreasing the total fixed cost, we will be arriving a lower cost per hour. And other one is to improve this 84,000. How we get the 84,000? 84,000 is basically the throughput. So we increase to reduce the material cost. And we can also increase the sale price, but practically if we increase the sale price, our customer might switch to our competitor, so suggesting that the price rise is not a suitable. So here are some measures that how we can improve the throughput accounting ratio. This is the most favorite question of the examiner, that how the company can improve the throughput accounting ratio. So please take a reading of this. I hope you will be able to understand this table. Please take a reading, and if there is any confusion, I am available to answer your query. Is there any question? Okay. So we will start question number, example 2. Now, there are two products, alpha and beta. Direct material cost is given, direct labor cost is given, variable overheads, fixed overheads. Total production cost 30, 42. Process time, blasting and smoothing are the two departments in which alpha and beta are produced. The time for each product in the each department is given, selling price is given. Fixed overheads are absorbed on the basis of direct labor cost. Alpha and beta passes through the two processes, blasting and smoothing. The capacity of the two processes limits the amount of production of the units. Blasting can be carried out for 8 hours per day, but smoothing can only operate for 6 hours per day. At these prices, customer will buy as many units as available. Our first requirement is to identify which process is a binding constraint. So, how to find the binding constraint? There are two processes. One is the blasting process and the blasting total capacity divided by per unit time of the product. So there are two products, alpha and beta. We can take per unit time of any product, and we can also take the per unit time of both, and we can solve it for 2 times. The capacity of the blasting is 8 hours. So the total capacity of the blasting department is 8 hours. And the per unit time of alpha is 15 minutes. So if we convert these minutes into hours, this will be 0.25 hour. How? 15 divided by 60 will be 0.25. So this is 0.25 hour. So the unit should be like with like. If one thing is in hours, others must also be in hours, not in the minutes. So how many units you will be able to produce for alpha in blasting department? I guess 32. Please confirm.
Yes.
Okay. Then the next department is smoothing department. So after doing the production of 32 alphas from the blasting, I will move to smoothing. But when I move to smoothing, the total capacity is 6 hours and the per unit time of alpha in smoothing is 25 minutes. So what will be in hours? 25 divided by 60. So what will be the time in hours? 25 over 60. Point 4 or something else?
0.4.
25 is okay, 0.4. So how many units
42.
will be
42.
0.42?
Yes, 0.42.
Okay, then what will be the number of units that we can produce in smoothing? $14. It means that Smoothing department is a department which is putting a limit on production. So as per our definition, a bottleneck is something which is putting a limit on our production. So the smoothing department will be regarded as a bottleneck resource, and I use the data of product alpha. You can verify the same by use of data for the product beta. The result will be the same. The decision will be the same, that the smoothing is a binding constraint. So if I use the data of beta, the per unit time of beta in blasting department is 25 minutes. So when I convert these minutes into hours, this will be 0.42. So how many units I can produce for beta in blasting departments, please? Then I will check the same for the smoothing. 6 hours divided by how many hours are required for one beta in smoothing, 20 minutes. So 20 divided by 60 will be 0.3333 hours. So I will get the number of units that I can produce from smoothing. So please give the answer for the number of units in blasting and smoothing.
Blasting 19 units.
Sorry?
Blasting it's 19.
19, okay.
And smoothing it's 18.
18. So
Yes.
our decision is again endorsed that the smoothing will be the binding constraint. Any department which is having a lower capacity to produce a final product will be known as a bottleneck process or a binding process. So it is up to us whether we will calculate from all with the help of all products or with the one product. The decision will be the same. So the first requirement was to identify the bottleneck process. So we will show this calculation, and at the end, we will write a line as the production capacity of smoothing is less than the production capacity of blasting. So smoothing department is a binding department or is a binding constraint. What production plan should the company follow? If you compare this question with the previous example number 1, in example number 1, production units were produced, but now in this question, the production units are not given. Now, you are required to find the number of production units using throughput per minute and contribution per minute. So I will solve it for throughput per minute first. Now remember that when you have identified a binding process, now onward, we will be considering that department. There are two products. One is the alpha and other one is the beta. First of all, sale price per unit and material cost per unit will be written, and we will find the throughput per unit. In the previous example, throughput per unit was given, but now we are given with the data. The price is 75 and 60. And the material cost is also given 12, 12. So 12 and 12. What will be the throughput? 3. And this will be 63. And this will be 48. So this is throughput per unit. And we have identified that the bottleneck process is smoothing. So now we will be having the per unit time. Which department? So in this case, smoothing is the bottleneck. Remember this point that we will be considering the time of that department, just like in the previous example, we considered the time of alpha, because the alpha was the binding constraint. Now the per unit time of smoothing for alpha is 25 minutes. 25 minutes mean 0.42 hours. And for beta, and this is 20 minutes. So the 20 minutes means 0.3333 hours. So we will get the throughput per hour. If we divide the throughput per unit with the per unit time, we will get the throughput per hour. Please share answer in dollar, that how much is the throughput per hour for alpha and how much is for beta. You need to divide 63 with 0.42 and 48 with 0.3333. This is $50 per hour throughput. And what will be for beta?
$144.
144. So if we look at the data, we are getting more benefit by consumption of 1 hour from alpha. So this is our first priority, that first of all, we will be producing product alpha. And then at the second stage, we will be producing beta, because by consuming 1 hour, we are getting a lesser dollar for throughput. So the alpha will be at the first choice. And how many units of alpha I can sell? The question indicated that any number of units, we will be producing only alphas. So if I produce alpha, how many production units I can produce? Smoothing taking 0.42 hours. So how many units I can produce per day for alpha? I will not be producing beta, because I will go for the one option which is generating a more throughput, because there is no demand constraint. So I will be producing only alpha. So we will get the answer that this is our production plan for alpha. And no beta will be produced, because we are consuming the 6 hours of smoothing only for alpha. What will be the answer of this? 14 units. So we will be producing 14 units of alpha per day and no beta. Is it clear? Please. And if we use the concept of contribution, so contribution concept is very simple. You have already done sale price per unit 75 and 60. Now we will use the figure of all variable cost per unit. Then we will arrive at the contribution per unit. The say variable cost per unit is 12 for material plus 6 for labor plus 6 for overhead. So there will be 24 for alpha and 32 for beta. 24 and 32. So we will arrive at a contribution figure 51 and 28. And the per unit time, bottleneck time is smoothing. So the per unit time is 0.42 hours and 0.33 hours. So if we divide the contribution with the hours, we will get the contribution per hour. So please share the answers of contribution per hour for alpha and for beta. Please be quick.
Alpha is 121.43.
121 point.
43. 43.
Okay.
And beta it's 84.08.
So in this case, this is the first choice and this is the second choice. Is it clear? So the same, but it might be different depending on the data. So there is a more comprehensive question from your past papers, the cake company question. And in this question, the first requirement is to identify the bottleneck process, then to calculate throughput accounting ratio, and in the C part, how to improve throughput accounting ratio. So the first part is almost the 2 or 3 parts are familiar with our concepts. So please, can we proceed for the example number 3, cake company? Okay. C cakes make 3 different types of cake: birthday, Christmas, and wedding. Each cake goes 3 processes: mixing, baking, and icing. So there are 3 processes. Whenever there are 3 processes, we need to concentrate on the sequence, that which process will be the first, which second, and which third, because there might be 2 departments with the lower capacity. So we need to take into account the sequence. So the first sequence in the cake manufacturing will be the mixing of materials, then baking, and then icing. So the first, second, and third is given in a sequence. Like many businesses, CE faces tough competition from a mature market. The cake has 20 production lines. What is the meaning of 20 production lines? It means that the same work is done at 20 places in the factory. So we are having the 20 production lines, which covers the 3 processes. The processing capacity varies for each process, and the manager has provided the following details. So the processing time per cake in hours. So this is not in minutes. This is given in hours for 3 cakes and the 3 departments. For example, the birthday cake needs zero point 0.4 hour in mixing and 1 hour in baking and 0.8 hour in icing. The cake factory is open for 12 hours a day, 6 days per week, and factory closes down 1 week in summer and 1 week in winter or Christmas. So basically there will be 50 weeks. So if we want to know the total capacity of each department, so what will be the total capacity of each department? 12 hours in one day, 6 days in 1 week, and 50 weeks in a year. And there are 20 production lines. The same thing is done at 20 places. So basically, what will be our total capacity in hours on annual basis? Please multiply this 12 into 6 into 50 into 20. So 72,000 hours is the total capacity. And now we want to know about the binding constraint. So the first department is mixing, and 72,000 divided by, I am taking the time of the first product, and the first product is the birthday cake. So birthday cake is taking 0.4 hours in mixing. So 0.4 hours. I will get the number of cakes that I can get from mixing department for birthday cakes. How many cakes I can produce? Basically, these number of cakes material I will mix in the mixing department on annual basis. That in a full year I can mix the raw materials for these number of cakes. So 180,000 birthday cakes can be produced in this factory in 1 year. So after mixing, I will move to baking. So the baking time is 1 hour for one birthday cake. So 72,000 birthday cakes can be baked in 1 year. It means no benefit of mixing 180,000 cakes material, because I am having a limit of baking. Baking can only bake 72,000 birthday cakes in 1 year. Then it comes to icing. The icing has the same production capacity, but the time of the birthday cake in icing is different. This is 0.8. So how many birthday cakes I can be able to ice in this company in a year? 90,000. Now, if you take the sequence, 180 cakes material will be transferred to baking, but baking will only be able to to bake 72,000. So 72,000 is the lowest number of production capacity among these 3 departments, because the next department is having more capacity. So 72,000 will be iced, but remaining 18,000 will not be there because of the binding constraint of the baking department. So at the end, we can write a line that based on this calculation, we are of the view that the production capacity of the baking department is the lowest. Therefore, baking department is a binding constraint. So the first requirement is to identify the bottleneck process. Then calculate the throughput accounting ratio. As far as throughput accounting ratio is concerned, you might remember that throughput accounting ratio is very simple. Throughput per hour divided by fixed cost per hour. Now, we need to have these two calculations for birthday cake, wedding cake, and Christmas cake. So before moving further, I will show the working here. This is the birthday cake, wedding cake, and Christmas cake. The sale price per unit of cake is given in the question. Selling price is 20, 25, and 80. So 20, 25, and 80. For calculation of throughput, we need to subtract the raw material, which is 5, 10, and 20. So the raw materials are 5, 10, and 20. So the throughput will be 15, 15, and 60. This is throughput per unit. And now we need to have the per unit time and which time to be considered. Can you answer? Because there are 3 times mixing, baking, and icing for every type of cake. So we need to consider the time of which department. I told you 2 times in the previous 2 examples.
Baking.
Very good. Baking. Because baking is the bottleneck process. So baking's time will be considered 1, 1.5, and 1.6. This is 1, 1.5, and 1.6. So how many cakes you can produce? Number of cakes. Sorry. This is dollars and this is hours. So this time is in hour. So the answer could not be the number of units. So this is throughput per hour. Throughput per hour means dollar per hour. How many dollars we will be earning? 15. And I guess from here we will be earning 10. And what is the answer of 60 over 1.6? We will be dividing.
At 7.5.
7.5 is the throughput per hour.
No,
So the throughput per hour is calculated.
It's 37.5.
Okay. 37.5. Is it 10? 15 over 1.5. The next thing is fixed cost per hour. Now, for a fixed cost, we need to identify the fixed cost. Material selling price. If we look at the fixed cost, one is the labor, 7.5, and we know that labor is also assumed as a fixed cost. And other factory costs are also 200 per year. So fixed cost is from 2 heads. One is the other factory cost 200,000 is the annual figure, other cost, other factor, our annual 1,000. So what will be the other cost per hour? And labor is also considered as a fixed cost. So the labor per hour is already given straightforward in the question, $7.5. Currency in this question pound, but I am writing it as a dollar. So no need to get confused yourself. You will use pound. So this was given, but you need to find 200,000 divided by 72. Please give your answer. $2.78. It means the total will be total fixed cost per hour. $10.28. So the throughput per hour is calculated the sequence of this was birthday, Christmas, and wedding. So the heading was wrongly written. I corrected it. So this is 10.28. Now, for a birthday, we have a throughput per hour $15, and we have a cost of 10.28. So what will be our throughput accounting ratio for birthday cake? Please share answers. For birthday, for Christmas, it is less than 1. And for wedding, I guess this is 3 point something. Every student should try to participate instead of waiting for the others. This is 0.97. This is 3.65. And the first one will be something else, but
1.46. 46.
So if we look at these three, 1.46. So this ratio is in times. You can use the word times, but if you will not use the word time, no matter, you will get the equal marks. So this is the throughput accounting ratio. Our question was calculate the throughput accounting ratio. Now, C part, how C could improve throughput accounting ratio. So this is again the examiner's most favorite part of the topic. And the D one, should the C discontinue to make Christmas cake? If you look at the solution, the ratio for Christmas cake is less than 1, which is showing a loss. So examiner is asking you whether we should cease the production of Christmas cake because it is generating a loss. So please think about it for a minute and then you can share your opinion with me. I am waiting for you. Please, after a little bit thinking, then share your opinion, and everyone is encouraged to share so that I can learn that from which point of view you are thinking. Do you want to share your opinion? I'm waiting for your opinion, please. You are trying to answer, Tanya, for improving throughput accounting ratio. But my question was related to part D. Should she discontinue to make Christmas cake? What you will say regarding this part D? That should we discontinue the production of Christmas cakes or should we continue? Justify your opinion. There are 9 students, but no one is willing to share opinions. Please share. I am expecting the wrong opinion from your side, so just share what you think. Okay, I got 2 comments. If the production is discontinued, the other 2 cakes will have to bear the fixed cost allocated to Christmas cake. Okay, should not continue to produce Christmas cake, therefore should not discontinue. Okay, so I got 2 opinions. One is to discontinue and other one is to continue. I will discuss both opinions in detail. So first of all, the opinion which suggests that this should be continued because in case of absence of Christmas cake, the fixed cost will have to be bear by birthday and wedding cakes. We are not following the traditional school of thought, traditional accounting system, which is absorption. If we will be following that, then you can say that. But here, our total profitability will be better if we drop the Christmas cake because the loss, if we are not having the Christmas cake, we will not be having some loss. So our total profit will be high from birthday and wedding. When we have Christmas cake in production, we will lower our company's profit because Christmas is having a loss. So the logic that you given was not correct, that the fixed cost will be borne by the birthday and wedding. When we calculate the, let's say, we can assume of the figures. We have calculated the throughput per unit. And let's say we are producing 100 birthday cakes and 100 wedding cakes for simplicity and no Christmas cake. Then in this case, I should assume the greater figure 10,000. I must, yes, okay, fine for 10,000. So from birthday, I will be having 150,000 as a throughput. From wedding, I will be having 600,000 as a throughput. And from Christmas, I am having 0. So this will be 750. And then I will subtract the fixed cost. So I will get a profit. Instead of getting this long calculation and confusion, I will give you another opinion, which will be a very solid opinion to continue. And that opinion is, I will link that opinion with the other recommendation, which was based on discontinuing the Christmas cake as throughput accounting ratio is less than 1. So now listen carefully. We will write in this way: as throughput accounting ratio of Christmas cake is lower than 1, which shows that there is a loss. And based on this throughput accounting ratio, it is not financially viable to continue with the Christmas cakes. So company should cease the production of Christmas cake based on the financial calculations. But the company should also consider other non-financial benefits associated with this Christmas cake. As we know that Christmas is a one-time event in the year, and customers buy Christmas cake in a large quantities on that single day. And if we are not making a profit on that eve, then by giving the better quality with the lowest price, the customer, we will be able to attract the customers for their wedding cakes and birthday cakes. So there is no reason to discontinue this Christmas cake, because this is not generating a too much loss, and this is also a one-time event in the year. And if we are not getting profit on one single day, this the customers who will buy the Christmas cake on Christmas will definitely will return to us based on our price and quality. So we will be having a benefit of extra sales from birthday cake and wedding cakes due to these Christmas cakes. Is it clear? So instead of relating it to fixed cost, relate this in this way. So you will get the maximum marks. Is it clear? Are you agreed with this opinion that I told to you? If you are not satisfied, then we can discuss it. Please let me know. Is it clear? So what we learned here, whenever in the performance management paper, examiner asks you for an opinion, remember, you must analyze your opinion with respect to financial factors and non-financial factors associated with that opinion. So this will be our general rule. We will be applying this rule in the decision making, then in the performance management. So from now onwards, remember this. Yes, I can repeat the answer. You can even listen the recording as well. We will write in this way: as throughput accounting ratio of Christmas cake is less than 1, which shows that there is a loss by producing a Christmas cake. As we know that Christmas is a one-time eve in a year, and if we are not getting too much profit or any profit on a one single day, it will not be so harmful for the company, because a customer who will visit our outlet on Christmas day for the Christmas cake, he will definitely return to us for his or her wedding cake or birthday cakes. So ultimately, we will be having in a greater profit on a yearly basis. So based on these arguments, I am of the view that the cake company should not discontinue the Christmas cake. So you can write something like that, but the main meaning must be between this concept. There is another question, Baba, and being simple question, I will leave it for you. Okay. Example 5. Contribution per unit is given. Bottleneck machine hours are missing. Sales demand is given. There are 3 machines used for manufacturing. Machine 1, machine 2, machine 3. 3 products X, Y, and Z. 1600 machine hours for each machine. Calculate throughput accounting ratio. So we will calculate the throughput accounting ratio, but before calculation of throughput accounting ratio, we need to identify the bottleneck machine. The identification is missing, that's why there is a question mark. So first of all, you need to identify and share the final answer that machine 1 or machine 2 or machine 3 is a bottleneck resource. Please solve it. If you are not able to solve, then I will solve it. But before I try, you should try. So please solve it and then share your answer. I'm waiting. students, I am waiting for the answer. Please let me know which machine is a bottleneck resource. And if you have identified and you are solving it in a full, then also share the answers. And if you are having some confusion, you can share the solution in WhatsApp group. I am checking the WhatsApp group. So waiting a response from your side because I want to know how much you have learned and if there is a so please solve and share. I'm waiting. Students, should I assume that you are not solving it and you are just wasting the time? If you are not able to solve, please let me know as soon as possible so that we can utilize our time. Okay, then you must respond early. Okay, look at the question. The first part which I gave to you is to identify a bottleneck process. This is very easy. 1600 machine hour is the total capacity, and per unit time for one each department is or each machine is given. So 1600 divided by 6 will give us how many units? How many units we will be able to produce for X? And similarly, from machine 2, how many units we can produce for X? And how many units we can produce for X from machine 3? So please share these answers. So 267 is the number of units that we can produce from machine 1. 178 of X we can produce from machine 2. And 533. So basically machine 2 is a bottleneck resource. So this was very easy, but was your confusions that you were not able to solve it? So here we will write the time of machine 2. The time of machine 2 for X is 9 hours, and the time of machine 2 for Y is 3 hours, and the time of machine 2 for Z is 1.5 hours. So this will be complete. The next part is throughput accounting ratio. And you know that for calculation of throughput accounting ratio, you must have the throughput per unit or per hour. So this is contribution. So contribution is another name used for throughput. So this is basically the throughput per minute, and the throughput per minute is given. And now when you will divide it with this, you will get the throughput per hour. Well, what will be the throughput per hour? 12 over 9. 1.33, and 10 over 3, this will be 3.33, and 6 over 1.5, 4. So this is throughput per hour, and then we need to divide it with the fixed cost per hour. Is there any information given for the fixed cost per hour? Any information for fixed cost in the question? I guess fixed cost information is missing, so we cannot solve it. We can assume that fixed cost is $3 per hour. Then we will be able to calculate the answer. So there was a typing error in this question. So if you identify this error well in time, then please every time remember that if any question, whether complete or incomplete, you are not able and you are stuck in, do not waste your time. Just let me know so that we can promptly start our topic or question. Is it clear? So the information provided was for which we can only calculate the throughput per hour. We cannot calculate the throughput accounting ratio. So let's now move to the practice kit because the topic is complete. But today's class was regarding the life cycle costing and throughput accounting. And now we have completed it. Okay, first of all, let's have a look at question number 56. A manufacturing company decides which three mutually exclusive products to make in its factory on the basis of maximizing the company's throughput accounting ratio. Selling price per unit, material cost per unit, machine hours per unit. The factory cost excluding direct material are 150,000. The company cannot make enough of any of the product to satisfy external demand entirely as the machine hours are restricted. What would be the effect of the following actions on the company's throughput accounting ratio? Please tick in the appropriate box. If you increase the sale price of Z by 10%, will it be able to improve throughput accounting ratio? What do you think? If we increase the sale price by 10%, what is your opinion? We know that if the price is increased, the throughput will be increased, and if the throughput will be increased, the throughput accounting ratio will be improved. So tick it here. So you just need to tick. Increase the selling price of Y by 10%. Before ticking, we can also solve the throughput accounting ratio. What will be the throughput accounting ratio of X, Y, and Z? Let me show you the calculation of this. The throughput will be 60 minus 40. This will be 20. This will be 30. This will be 4. Per unit time is given. So if I divide it with the time, I will get the 2. I will get 1.5. And what will be the answer of 4 over 2.5? 4 over 2.5. So this will be throughput per hour. So this is 1.6. As question said that these products are mutually exclusive. Mutually exclusive mean we will be producing only one product. So if we are only producing one product, we will go for the product which is having the highest throughput per hour. So we will be producing X. So we will be producing X. Now, what will be the effect of changes in the price? Now, if we increase the price of Z by 10%, let's say the new price is 22, then 16, this will be 6 over 2.5. What will be the answer? If we divide 6 over 2.5, 2.5 is the per unit time of the bottleneck resource. Then what will be the ratio? This will be 2.4. It means that now we will be switching to Z because products are mutually exclusive. In the original scenario, we will be preferring X. But if there is an increase in price, the revised throughput per hour is 2.4, and now our decision will be shifted. So we are saying that this is the case. And now, if we increase the sale price of Y, then increase this with 10%, 44 minus 10, this will be 34. Now divide 34 with 20. What will be the answer? 34 over 20. 1.7. So in case of 1.7, our decision will be same for X. So here we will take that throughput accounting ratio would not improve because our decision is not changing. And in the third, reduce the material cost of Z by 5%. Now, we need to reduce this cost. So what is the 95% of this? 16 into 95%, because the statement number 3 is showing that material cost will be reduced by 5%. Sixteen into 95% will be your new material cost. Please share quickly. How this is 95%? Because 5% is reduced. So out of 100, 5 is reduced. So the remaining will be 95%. You can take the 5% of 16, then subtract from 16, you will get also the same answer. Am I audible? Students, am I audible to you? Okay, then please share the answer. Not so difficult question. What will be the new material cost after reduction of 5%? 15.2. So 15.2 will give us 4.8, and now you will divide it with 2.5. What will be the new throughput per hour? So I guess this is less than 2. So if this is less than 2, our decision will not be different. So we will take it here. Then reduce the material cost of Y by 5%. So if we reduce this by 5%, this will be 9.5. So ultimately we will be having a 30.5. So again, the answer is less than 2. So we will be here. Is it clear? Please update me whether you are okay to understand this. Because the three products are mutually exclusive. So in case of mutually exclusive, we need to go for only one option, which is the best. Now, question number 55. When demand exceeds supply, which one of the following situation would increase the throughput accounting ratio? Can you make a guess? But be quick. Do not waste the time. What do you expect that the right answer is? Let me discuss the D option. A 10% sales discount to stimulate a demand by 20%. This could be the reason, but I suggested you that never go for the changes in the price for improvement of your units. This could be the answer, but first of all, we will look at whether there is any most appropriate answer. Then now I am discussing the A option. An increase in the speed of the fastest machine in the production process. Okay, if you bring a fastest machine, this will incur some cost, and as a result of this cost you will have some depreciation, so the fixed cost will be increased. When there is an increase in fixed cost, throughput accounting ratio will be reduced. So this is not the most appropriate. Now we are left with two options, B and C. An unexpected increase in the factory rent. So if there is an increase in factory rent, throughput accounting ratio will be worse. So B is not the answer. Let me read the C. A 5% increase in wage. So there is increase in labor cost, but 8% improvement in productivity. 8% improvement in productivity means your per unit time will reduce. So there is a 5% increase, but there is a 8% improvement. So ultimately we will be having a lower per unit time. So C is the most appropriate answer, because due to the reduction in per unit time, throughput accounting ratio will definitely be improved. Is it clear? D could be the answer, but we need to select one. So C will be the right answer. Okay, question number 57. Sky Limited operates through an environment where the products go through two processes, process P and process Q. There are 8 machines operating at 90% capacity in process P. Each machine produces 6 units per hour. There are 6 machines operating at 85% capacity. Each machine produces 9 units per hour. Sky Limited produces the product Cloud, which is not a popular product. The marketing manager has therefore decided to apply a price discount of 15% on the selling price of 20 per unit. The material cost is 5 and the labor cost per unit is twice that of the material cost for Cloud. So the labor cost will be 10. It currently takes 0.2 hours and 0.3 hours to make a unit of Cloud in the process P and Q respectively. What is the Cloud's throughput per hour for the bottleneck resource? So first of all, you need to identify which process is a bottleneck process. And then we will find that which process, which is the, what is the throughput per hour. So if we look for the process P, there are 6 machines or 8 machines. There are 8 machines and they are producing 6 units. So 8 into 6. It means 48 units can be produced. But question is saying that they are operating at 90% capacity. So what will be the 90%? Please share answer. So 43.2 units per hour. And if we go for the process Q, 6 machines are there, 9 units, 54, but it is operating at 85%. So how many units per hour this machine is producing? So what do you think? Which process is a bottleneck? The one who is slower. So basically process P is producing lesser number of units. So process P is a bottleneck resource. So this is identified. Then what we need to find throughput per hour. Now the sale price is 20 was the original, but 15% is the discount. So what is the 85% of 20? The price we will be charging for this. $17 will be the price. And the material cost $5. It means throughput per unit is 12. And how much time cloud requires in process P? 6 units per hour. It means 1 divided by 6 will be your per unit time. Six units in 1 hour. Sorry, this is 0.2 hours. It is given in the question that the per unit time consumed by cloud is 0.2 hours in process P. So the time is directly given. So we will simply divide it with 0.2. What will be the answer? 60 over 0.2 because the time, bottleneck time for the cloud is given. So $60 will be your answer. Is it clear? Okay, let's do 1 or 2 more questions. The following information is available for a single product: units produced, time taken, maximum time available, materials purchased, material used. labor cost, overhead, sales. Which of the following is the throughput accounting ratio for the product? So we need to find the throughput accounting ratio. For the throughput accounting ratio, we need to subtract the revenue, sales minus material cost. And what is the material cost? Material cost is given 3,000. So 6,000 is the throughput. Now, there might be a confusion that this is the cost of purchasing, but we used only 800. We know that in a throughput accounting, we do not hold inventory. So inventory is not recognized as an asset. So we will be having the cost of material equal to the cost of material purchased. Now the factory costs are labor cost, overhead cost. So the total will be 3,500. Your factory cost or fixed cost are 3,500. And how many hours are there? Hours information of the bottleneck resource is not given. So if we are not having the bottleneck resource information for the hours, for the time, we can simply divide the throughput with the fixed cost. Because in a previous, we divide through throughput per hour with the fixed cost per hour. So now I am taking the total throughput and I'm taking the total fixed cost. So ratio will be the same. The answer will not be the different one. You can check this with the help of any other previous solution in which we calculated the throughput accounting ratio based on per hour basis. If you take the total figures, you will get the same ratio. So you can verify for your satisfaction, but you can rely on me that the result will be the same. So 6,000 divided by 3,500. What will be the ratio? 1.71. So I will select this one. Another way to do this is that some people will think that the hours are given. So let's say if I take 200 hours as a bottleneck hours. So what will be the throughput per hour and what will be the fixed cost per hour? So I will arrive at a per hour answer. Is this 30? And 3,500 over 200 will be how much? $3,500 over 200 will be 17.5. So 30 per hour over 17.5 per hour. So it must be 1.71. Please check. So you can also do it in this way. So let's have a reading of question number 59. A manufacturing company uses three processes to make its two products X and Y. The time available on the three processes is reduced because of the need of the preventive maintenance. Process 1 to 3, hours available per day, hours required to 1 unit of X and hours required to 1 unit of Y. Daily demand for the product X and Y is 10 units and 16 units respectively. Which of the following will improve the throughput? So you need to read it and think it whether it will enhance the throughput or not. So I am leaving it for you. And true or false is also related. I'm leaving it for you, and the 61 as well. I will solve question number 62, and this is the last question for today's class. The question I leave, you will do it by yourself. A company has recently adopted throughput accounting as a performance measurement tool. Its results are units produced, units sold, material purchased, opening material, labor cost, overhead cost, sale price. There was no opening inventory of finished goods or closing inventory for materials. Which of the following is the throughput accounting ratio? So in order to calculate the throughput accounting ratio, you will calculate the throughput as the costs are given in total. So we will convert the price into revenue. 800 units are sold. So our total revenue will be how much? 35 into 800 will give us the revenue figure. 28,000. And we will subtract the cost of purchases of materials minus 13,000. So we will get the throughput in total. And now we need to have the factory cost. Factory cost is the labor cost and the overhead cost. So the sum of these two will be how much? And in the previous example, I told you that if you are not having the per hour calculation, you can simply use the total calculation. So I am using the total throughput, which is 15,000, and total fixed factory cost are 11,550. So I will arrive at a throughput accounting ratio. It could be either 1.3 or 1.5. Please check it, which option is suitable. So no need to convert the throughput per hour and the factory cost per hour. If you note in this question, we have already ignored this value, closing inventory value, opening inventory value. Why we ignored that? Because at the start of our today's topic, we said that in throughput accounting, inventory is not regarded as the asset. It is the result of the unsynchronized process. So it is not good thing in this topic. Is it clear? Everyone, please share your feedback regarding today's class. Are you okay with these two topics, life cycle and the throughput accounting ratio? Now, at the end, I want to know one thing from you, that if I was not able to take class on coming Saturday, can we do it class on some other day which is suitable to all of you? So please share the suitable day that you will be available so that I can plan. Otherwise, I will think accordingly. And that is not certain, but if due to some uh, problem at my side, maybe I will not be able to take Saturday class. So in that case, just like one student said that I am not available in any other day. So what are the other students' feedback? Sunday, okay, I am comfortable with the Sunday, but okay, any other options? And everyone should share. If you are not, you can even say that I am not available on any other day. And if you can be available, and the time could be in the evening as well. Because for extra class, we can adjust the time, but okay, after 6 p.m. Mauritius time, you will be available in any other day. Okay. Okay. Please, others are also requested so that I can plan accordingly. Otherwise, I will simply give you the off, and but giving off, you will slow your syllabus. So you will be having a pressure on yourself. I will be available in evening after 6:30. Okay. Uh, so a bottleneck is now shifted from 6 to 6:30. Okay, I will plan 6:30 onwards. So obviously the people who will be available after 6, they will definitely be available after 6:30. Okay. A few students are also remaining to share the feedbacks. Okay, 6. Okay, for a consensus, I can say that if I arrange a class after 6:30 p.m. on the weekdays, you will be available to meet the uncertainties. So I will plan well in time, and then I will inform you about the time. Otherwise, if I will not inform you anything, otherwise our regular class will be as per our regular timings on Saturday. So you need not to worry. I will share you well in time, and the time will be after 6:30 p.m. during the weekdays from Monday to Friday or Saturday. I will clear you hopefully on Wednesday or Thursday, whether there will be a class on other day or there will be a class on regular time. So what you need to do, you need to revise this topic, life cycle costing and throughput accounting. I request you in every class to read during the week. Either you can read from the handouts or you may read from the textbook. If you read from the textbook, it is very good. I'm not encouraging you to read from the handouts, but if you read from the textbook, this is very good. And also try to solve MCQs as much as you can. And if there will be any MCQ that is not clear or you are having any confusion, you may ask me in the group or in the individual chat during the week. Do not wait for the class. You may simply send me your query. I will definitely reply you in my free time or whenever I will be available as per my earliest convenience. So try to start practice and revision so that you may appear, you will definitely be appearing in December attempt. So try to prepare yourself from the very beginning. Do not wait for the last month that you will revise in such a way that no one has revised the course so far. So try to revise and prepare yourself from the very beginning. So with this message, if there is no confusion or question, we can end the class. So if you have any question, please ask. Otherwise, take care. Bye bye. Okay, bye.